So this video is going to be a little different than usual. As you can see, we're starting out here with a profit picture showing you that there are some absolutely massive trades that we're currently in right now. And I actually just got done writing up a report for our market research platform, and it inspired me to really want to go out and create a video for you guys that have been following us on YouTube for the last couple of years. Most of you guys are swing traders. You're not looking to day trade, so you're holding these positions for a reasonable amount of time. And I want to show you the importance of managing a trade throughout the life of the trade, particularly if you're taking it for multiple days, weeks, quarters, right? Months. A lot of the time, people will take things and they'll indiscriminately close it way before profit targets are hit just because they're up a decent amount or they don't know where to stop out. And so I really think today in particular, with the moves that we've seen in the market over the last few sessions, a lot of the trades that we're in are up massively that we might not have been able to take advantage of if we closed out, stopped out early, we ran away from price action that wasn't necessarily invalidating our trades, but maybe it was enough to scare us. I really want to stress the importance of what it's like to trade as a, professional or profitable trader / investor versus a hobbyist who never really nails down a system, never really consistently brings in any cash. Hopefully some of the things I talk through over the next 5 to 8 minutes are going to resonate with you guys. That was kind of a long intro, a little bit of a clickbait entry here, but this is a real positions list. And so let's talk through this, and hopefully I can give you guys some wisdom to stick with these trades a lot longer than what most people would be able to. So this is a trader inside of our insider Discord. He's a member of our market research platform, but also one of the yearly subs that comes in and trades with us in Discord. And he recently, earlier today, dropped this positions list and was like, listen, I've taken all of these trades over the last couple of months and they're all up massively. If any of you guys are struggling to hold winning positions, let this more or less be some inspiration. And it gave me kind of this opportunity to talk through how he was able to do what he's able to do, particularly with the trades that you can see expirations are going out and some of these things for multiple months more, and they're already up multiple hundreds of percent. How was he able to hold these trades through some chop, through some volatility, while still remaining true to the idea of the trade? Was it stopped out? Was it hitting a price target, etc.? What that comes down to is managing the trade. You have to be able to take profits even when things are working out to the upside without closing the entire position. And so what I want to do here is, obviously you see the trades, right? He has a fantastic positions list. Every single one of these has been posted on the market research portal. I'm going to go ahead and just kind of click through a couple of these so you can kind of read the trade report. I don't care if you can read them now because obviously this trade report is working and you can't take the same trade that we took back when we took it. So this is proprietary information that you're now privy to. But this was the chart for Dole, for example, his biggest trade that he has on the books right now. This is what we were looking to do. Take it above 14. We wanted to target that $18 area and then beyond that into all-time highs. What it really comes down to is understanding that if you're trading an options contract, it's not going to track underlying price one-to-one. And what does that mean? Particularly with the way that we trade, a positive move in the direction that we're trading, in this case, we were trading the November 15th $15 calls, is going to translate to a larger percentage gain for the contract because we're trading in a low IV environment. What does that mean? We're going to get paid by both an implied volatility, explosion, expansion, however you want to say it, also along with the move, the directional move in the underlying price action. So we were expecting Dole to break out to the upside. It was a low IV environment. We wanted to get in calls, which benefit from both of those. And then what we want to do here, and what I outline every single trade we take, is close half of it at 100% profit. Guys, I can't stress this enough. This is an old George Soros trick. And although he's a scumbag and everybody hates him in real life, he's one hell of a trader. And what he preaches is remove the principal from the trade as quickly as possible. And if you're trading with options, that means 100% profit. Remove it. Close half of the trade at 100% when you get up there, because then what you're dealing with is just house money. It's just unrealized profit. You're able to hold for the bigger trade. You're able to make better decisions from an emotional standpoint if the trade itself is not risking any of the account capital. Remove it. And so what we did with DOLE, you can see it was not, and what you're going to notice from a swing trading perspective is these moves typically aren't parabolic, right? You're going to have to hold through some chop. You're going to have to hold through some volatility, but that's part of the process of swing trading. We're trying to play the trend. What's the primary trend? We buy a bunch of time on these. We're trying to capture a trend over the course of weeks or months or quarters. We're not necessarily worried about what it's going to do over the next 3 to 5 days. And really, that falls off to a lot of traders. You buy 6 months of expiration and you get shaken out of a trade 5 days in. It makes no sense to pay for 6 months of expiration to get shaken out over a couple day move, specifically right when you open it, right? So really you got to let these things breathe. But the number one way that you can let that happen is by taking half off at 100%. So the trade obviously started to work immediately. We got the market pullback back on the middle of August, right? We had the Japanese yen carry trade and everything else that was going on, a lot of the seasonal volatility. But then we got, for whatever reason, a big boom to the upside, and this gave us that 100% move on Dole. And so what we did was we sold half of the contracts at 100%. Once again, removing all principal from the trade. That means all of the money that we initially put into the trade is now coming out, and now the rest of the money that's in that position is strictly profit. So if that trade goes to really or hypothetically negative 100% and it closes, expires worthless, we lose nothing other than commissions and opportunity cost. Very rarely do we let those things go to negative 100, but let me extrapolate on that really quick. Let's say a contract goes to negative 50 after you've already taken profit off of the contract and you decide that that trade idea is dead and you close this. Is that a loss? No, you've already removed all principal. So whatever you get for this back is profit. It's still a profitable trade. That's very complicated for some people to understand. And it's just basic math, guys. Back to the point of the video, taking half off at 100% allows us to continue to let the trade work itself out for as long as it needs without invalidating the trade idea, right? Core trade idea is as long as it's above 14 bucks, we want to hold this thing up to all-time highs. That was the price target to begin with. What we look for in this once we take half off is the trend reversing? Are we having major levels break to the downside, right? Are moving averages starting to slope over? Are they starting, in this case, to horizontal channel, potentially slope over? Has the RSI broken below the 50? These are classically signs of a momentum waning and maybe the trade idea that we originally expected is not going to work. In this case, Dole did not. Yes, it pulled back for a couple of days, found support at previous resistance, and then rocketed back up in towards 52-week highs. And that's why we're able to see the massive win on Dole right now. But it wasn't just, hey, buy this and forget it. It's you have to take an active position in these trades. You have to be able to manage them as they progress. That's also why we try to stress traders inside of our service to not take 15, 20, 25 trades at a time. It doesn't make sense. Each of these trades are something that you're going to have to manage on an individual basis. So if for whatever reason the market pulls back and all the positions we're in get slapped at the same time, that's going to be 20 to 25 potential decisions you have to make in a single day. And if you're anything like me, a swing trader, and anything like the guys inside and girls inside our community where they're working 9 to 5, or they own their own companies, they don't have the time to manage 25 trades per day. That's why they're swing trading, right? So really understand taking risk out of the trade as the trade progresses into strength. Try not to wait for a pullback because the contract premium is going to get hit a lot harder on the way down, right? So maybe the underlying asset comes down 1%, but the premium on that contract comes down 35 and you feel like an asshole. That's why we want to take strength or take risk off into strength. As soon as it hits that 100% mark, we want to go ahead and remove half off. A couple other trades here that you can just kind of look at. The GEV trade that we were able to stick here. You can see it's just our basic IPO range breakout high. We want to own it above 183. We bought it on the pullback. It's really not that complicated of a trade. But once again, the reason why it's up over 300% for this individual is strictly because we were able to take half off at 100% and then wait for the bigger move. And obviously the bigger move is a very, very big move. This contract turned 100% somewhere around here, right near the price target. We've been able to chip off some of the profits in towards those overhead price targets here, which is the next layer. I don't want to go into it right now, but once again, make sure you're taking profits into strength to maximize the contract value of that particular trade, right? So GEV is another big one. We have Palantir, which a bunch of you guys are probably in. We've talked about it a lot. This trade is up reasonably well right now. You can see that we opened it prior to the market pullback. We decided to hold through it. And obviously it has worked out well. If we go back, you can see what the trade's actually up right now for this individual, 103%. So it's completely risk-free now. If we go and actually look at Palantir, right, this is screaming up towards 40 bucks. Screaming up towards $40. That was our original price target. Now we have a completely free position to let this thing do whatever it wants to do for the next 2 months. We have November's, right? But that's the whole idea here, is to try to remove risk from the trade as soon as humanly possible, because when you do that, you're able to hold the trade for a lot longer than what most people can. We look at Discord really quick, and this is really just to drive it home. We are a swing trading group. There's no ifs, ands, or buts about that. We hold trades until they are complete. We do not close trades at indiscriminate amounts. Oh, this trade is up a lot right now. I don't care. To quote Kobe, is the job done? That's it. Is the job done? Is the trade done? Has it given you a reason to stop out entirely? No. Keep a core position on it. So we practice and we practice and we practice how to take trades or how to take profits on the way up at predefined areas. You can see Brian here in his app trade, 881%. He opened this back August 21st. So this is less than a month now. By no means do I want to sit here and say we knew App was going to do this, but obviously App is a market leading stock, which we've owned all year, by the way. We already have a trade on this that was worth $1,500% back in July is when we closed it. So we've been all over App all year. So I'm not surprised to see App continue to lead, but here he is trimming. He's trimming. Can you imagine having a position up 881% and saying, I'm going to trim a couple here, not close the entire thing? Because if we look at TradingView right now, we pull up App, by no means into all-time highs. Do you want to sell the entire position, right? Because just because it's up an indiscriminate amount, 800% is a lot, does not mean you want to finish the trade here. You still have another month left on those contracts, Brian does. And as of right now, this is in price discovery mode. We have no idea how far this thing is going to go. So take partials off on the way up. Pay yourself for the risk that you took when you originally took the trade, right? That's how you want to do this. Keep a small position on the books to continue to work for you. And we have lots of these. Dole's up 527%. Zillow's up 327. Dole for me is up 457. Duolingo 300. Here's an old GEV position, which is now up over 400. We have Bank of New York Mellon. Here's a trade we just put on a couple of weeks ago that we sent out to the free newsletter. I don't know how many of you guys took it. We talked about it on TikTok and YouTube. Here is an all-time high breakout in a financial stock that we're able to turn free. So now, while this trade works its way up towards that $80 to $81 price target, we have no principal risk against our account. If this trade doesn't work, we lose nothing. If it does work, we make a lot of money with no risk in the market. That's the type of game that you want to play. So once again, I can continue to go through here, and you can see like the positions that we have on the books. Most of this stuff I post on Twitter, I talk about on YouTube. None of this should be, wow, this is a surprise that they are long these types of positions. We're very consistent with the type of stuff that we trade, right? The whole idea here is to hold for the bigger move while managing risk and strength. So hopefully that gives you guys, something to think about here. Trading is not just randomly clicking buttons. Having a plan and executing that plan to a T is how you consistently bring money in via trading, investing, etc. Right? So here's my sales pitch. If you like what you saw here, you can sign up on a quarterly basis and get access to all of these beautiful trades. You can see all of them. We write them up with the entry, the stop loss, the take profits, the contracts that we're taking. You want to trade with us on a quarterly basis, you have access to all of this right here. This is our market research portal. A link is down below. And for those of you that join the market research and want a more personalized experience for whatever reason, you like the service, but you want to trade with us on a day-to-day basis, you need that hand to be held a little bit to hold for those bigger wins. This is exactly what we do every single day. You can apply once you're inside the market research for the insider Discord access if you want. It comes with a year of the market research subscription as well. That's my sales pitch. Guys, my name is Hamilton. I'm here with the Trading Initiative. If you like this type of content, please like and subscribe. Hold your winning trades a lot longer than you expect and watch how much money you make in the long run. I'll catch you in the next video.